What is happening, guys and gals? Joe Badger here, your money mentor, where we have deep pockets and short arms. I want to talk about investing 101, getting started in the stock market, because I know that there are a lot of you out there who would love to start investing in the stock market, but just don't know how. And that goes for those of you who have very little money and those of you who have a lot of money. Because I know that there are a lot of people out there who would like to start investing, but they have never been shown the very basics. And so what I want to do is share with you my nearly 40 years of experience in investing and managing my own stock portfolio to help you get started on a very basic level. So remember to subscribe, because we have a lot more coming and you do not want to miss out. So to get started, I think we need a little bit of perspective on everything, and that is to know a little bit about investment history. Like I said, I've been doing this for a long time, and when I first started out, there were no computers, there were no buying stocks online or opening up your own brokerage account and doing it yourself, which is the way I advocate today. But what you had to do, and what I had to do, and let's say when I graduated high school, I think is when I started investing, and I knew of a financial broker down the street. So I went to his office, opened up an account. I had to transfer some money to him, and then I had to talk to him about which products, financial products, I wanted to buy, whether they were individual stocks or financial funds or what have you. Then we would purchase them, and I would pay him a large fee to make that purchase. Then, if I ever sold that stock, I would then be charged another gigantic fee just to sell my own stock. So I had to make up for that difference. So you really had to be good at investing. And then, one of the funniest parts about it was, in order to see where your stock was and what it was doing or how it performed that day, there was no real-time reporting. There was, you wait till the next day, the newspaper comes in the morning, and the newspaper had a list of all the stocks, and they would list what it closed at, what it opened at, and how high it went that day, and how it performed. And so you had to wait the next day to find out how your stock performed the previous day. It was hilarious. It was a very slow and interesting way to do things. But now, thank God that we can use our own computers, we can use our phones, and we can do this ourselves with the right amount of information. That's what I want to get you started with here. And so the next step would be the process, actually doing a very basic setup, getting started with investing, whether you have a small amount of money or a large amount of money. The basic steps to get started in opening an account is to find a brokerage firm, transfer money, and then buy a financial product. Now, we're going to go through these 3 steps slowly, but I want you to know that a couple of things. First of all, I think this is the best way to do it. There are many ways to invest in stocks these days, especially with different online platforms. But looking over my nearly 40 years of investment experience, I think this is the most secure and safe way to go about it. And that's why I'm going to recommend this process. Also, remember, always, investing in the stock market can be risky, but it can also be very rewarding. In fact, that's why I highly recommend investing in stocks, because your money's not going to grow otherwise. In fact, over the lifetime of the stock market, it has always gone up, and it's always improved as long as you were patient, you didn't do stupid things, and you were wise about your investments. So there is a little bit of risk. You have to know that before you go in. In fact, I would say I have a high tolerance for risk. I personally, and that's why I manage all my money and all my stock investments, and why a lot of people do that as well. But you have to have a certain level of tolerance for risk and to do this, because there are days when the stock market goes down and you see that money that you put in there, whether it was $10, $1,000, or $100,000, you see that money drop and you want to panic and you want to get out. But so just so you know that ahead of time as we go into this process. So once again, number one is to find a credible brokerage firm. And by a credible, reputable, time-honored, solid brokerage firm, stock brokerage firm, I'm referring to some of the big guys like, and by the way, these are just examples. I know they exist, but I think they're very good examples. TD Ameritrade, Fidelity, Charles Schwab, or just Schwab, I think they go by now, and Vanguard. These are big institutions that have been around for a long time, and they are not going anywhere. Also, your money is going to be very secure with them. They are insured by the federal government, and they're a safe bet. They're not a risky fly-by-night. They know what they're doing, and they have a lot of resources. As a matter of fact, the resources that they have are very good, that once you've set up your account, you have a lot of research options on the account itself. You can call customer service, and customer service, I know my own experience with customer service has always been excellent. And that's a hard thing to find these days with an online customer service platform. But for the investing I do, I call up the people, and sometimes you have to wait a little bit. That's just natural. But once you get a hold of someone, they're very helpful, very knowledgeable. And so if you have questions, they can help you out. And that's why I would recommend one of these big, larger platforms or firms. They are financial institutions. They're not banks. I do not recommend the banks, by the way, and that is very important here, that I do not recommend investing with the banks or with your bank where you might already have money. I suggest, and this is from my experience, that the best way to invest your money are through these larger institutions, these larger brokerage accounts that are set up specifically and only for stock investing, mutual fund investing, etc. Investing and building a long-term portfolio. So once again, I'm going to name these off, and these are just examples, by the way. I know these to have been around for a long time. TD Ameritrade, one of the first companies to start online investment. Fidelity, Vanguard, and you may have heard of these or you may have not. And the last one is Charles Schwab, as he tried to say Schwably. So anyway, those are some really good institutions to get started. Look them up, plug in your information, open up an account. You don't need any money. That's one of the greatest things. You don't need any money. It's like opening a bank account down the street. You don't need anything to start with. And that is process, or I should at least say step number one. Okay, the next step, an easy step that you want to take, and which makes a lot of sense, is you have to put some money into your account. However, you need to transfer money into your normal bank account, from your normal bank account into the brokerage account. You need to do that first. You have to get some basic money in the account to start with. And that could be a small amount of money. That could be $50. Okay, it could be $100. Or if you got some money, transfer in $50,000, $100,000, whatever you feel comfortable, that's your decision to make. But if you're just getting started, it doesn't take a lot of money, and that's what's so great about the online accounts these days. Another important point to make about the money that you put into these accounts. You want to be in a position where you're not paying fees, that you're paying zero fees, that you're paying very little expenses. Always, from the beginning to the end, you always want to be in a position where you're not paying a lot of fees to transfer money, to make a trade, to buy a certain financial product, whether it's a mutual fund or a stock, and they're charging you fees. Always be ahead of that game. You don't want to ever be paying fees or expenses or anything that's going to set you back. That's counterproductive, and that's one of the fundamental tenets of investing. Keep that in mind now and for the future. So once you get money into the account, now we're going to get into which products you need to be purchasing, especially if you're just beginning. Okay, step number 3 is actually buying an investment. Now, I don't want to talk over anybody's head. I don't want to get too far into the weeds. This is just an investing 101 and a way for you to get started. So if I'm going over something too quickly, please leave a comment, ask me a question in the comment, and I will do my best to answer your questions. But I'm trying to give you enough information to get started without getting too complicated. So number 3 is you're going to buy a stock. Now I say stock because everyone kind of knows what a stock is. It's a stock in a company, a stock in Apple, a stock in Tesla, a stock in Netflix, a stock in Johnson & Johnson, a stock in XYZ company that I've never heard before. There's just millions and millions and millions to choose from. So how do you choose? Well, once again, all my years of experience would say this is the best way to get started. An index fund. There are certain indexes that track the market, and they're representational of the entire market. The Dow Jones is an index, the NASDAQ is an index, the S&P 500 is an index, the Russell 2000 is an index, and these are just representative baskets of stocks that kind of just follow the ups and downs of the market in general. So what did I tell you? Over a long period of time, the market is safe and good for investments. And so if you buy an index fund that just follows the market itself and doesn't follow a certain segment, doesn't follow a certain company, it follows the entire progress of the company, then that's a good and safe way to at least get started, in my opinion. So an index fund that I would recommend, and you do a search on your brokerage account and you find index fund and you look for one that's an S&P 500 index fund. You look for one that's a NASDAQ index fund, and you look for one that's a total market index fund. Here's the good news. There are no limits and there are no fees. There are very, very, very small fees because it's an index fund. It's not being managed and they're not taking fees or expenses from you. And at the same time, you can start with very little money. There are products out there that have minimum deposits, like they might require you to have a minimum of $5,000 in them because they can back that up with some performance over the last 10, 20 years, let's say. The index funds, that's a great thing about them. And there are some out there, I know Fidelity has some that has zero nada expenses. And they're actually called zero, like Fidelity, zero, something, something, something. But these are good examples. So go to your brokerage account, look up index fund, put some money into those. And the way to put money into them, let's say you have $1,000 to invest. You don't want to take all 1,000, dump them in there, sit there and go, okay, now I want to see my money grow. Because, Murphy's Law, the next day it's going to go down. And maybe the next week it's going to go down. Maybe the next month it's going to go down. So what you do is every single month you take a portion of your money. Let's say you have $1,000, and this is just an example. You take $1,000 and you put $100 into it one month. Next month you put another 100 into it. Next month another 100, and so on. And if you're bringing in an income and you're developing and you're growing your savings, you can put more and more to invest. All right. So to sum up and conclude, we want to follow 3 basic steps. 1, open up an account in a major brokerage firm. Number 2, transfer some money. And then number 3, purchase some index funds. And the best way to purchase them is on a monthly basis. So I hope this helps you get started. I hope I didn't talk over your head. And if you have any questions, please feel free to leave them in the comments and I will answer your questions the best I can. And remember this one last thing before we go. The best time to start investing is now.